Hello, I'm Finola Burke from RaaS, and today we're focusing on data analytics company Pureprofile, ASX ticker PPL, and joining me is Managing Director and CEO Martin Filz and Chief Financial Officer and Chief Operating Officer Melinda Sheppard. Thank you both for joining.
Thanks for having us, Finola.
Thanks, Finola.
And now I'm going to start with you first. Now, Pureprofile has delivered a significant lift in underlying EBITDA and margin in Q3. Where did you see the margin expansion?
Yeah, well, there's a number of reasons that we had such a fantastic quarter. The first is the investment that we made in new sales capability in the back end of FY22 and in the first quarter of this financial year is really starting to pay off for us. We did indicate that investment would take about 9 to 12 months for us to really see that benefit, and that's what you've seen in this quarter. And a really wonderful example of that is our top client actually in the month of March delivered about $215,000 worth of revenue from us. And that actual client came through with one of the new team members that we brought on in June last year. So that's a wonderful example of bringing in really great talented people with great client base starting to sort of pay back for us. The second reason is we've been working a lot on our consolidation of suppliers for third-party panel when we procure that. We've been putting rebates in place and we're starting to really see the benefit of that now. So that's giving us a margin improvement that you've seen obviously flow through to the bottom line. The next thing is we had a really strong quarter for our audience builder solution as well. So we had really strong growth and that's really helped boost our bottom line. And then the final thing is as we've sort of been indicating for the last 6 months is in this sort of macroeconomic climate, Martin and I have been really prudent on expenses. Every dollar that we invest has got to be revenue generating, and you're really starting to see the benefit of that because our core business, our data and insights business, is still growing really strong. And so that's what, the result that we've seen for the quarter is all those combination of different factors that we've been working on and indicated to our investor base that, has been a key strategy for us.
And Martin, it's been your strategy to grow the business outside Australia, and we've seen significant growth in this last quarter outside Australia, as well as in Australia. But can you talk about the drivers behind this growth in the last quarter?
Yeah, thanks, Finola. I'm going to echo quite a lot of what Mel has just said. The UK and EU in our latest results is 41% up in the quarter year over year versus APAC, which is 20% up year over year. Both are great numbers, but the UK, EU growing at double the amount. And the reason being is, as Mel just said, that's where we put our investment. And what's particularly exciting about that is we've also got now our first audience builder client in the UK, which should be coming online in Q4. We've got our first audience builder client in the US, which should be coming on also in Q4. And both those using the same solution that Flybuys uses that Mel talked about as being particularly strong. And for us, growing in the other markets, I've said before, US 40 times bigger than the Australian market, UK 14 times bigger than the Australian market. And for us, it's the same language, the same technology, can be supported by our hubs either locally or India and Philippines. And so we've got a really low cost of growth in addition in those markets.
And Martin, Pureprofile has taken the difficult decision to close Pure Amplify Media to focus just on data and insights. How will this impact the overall business this year and next?
Yeah, look, we're sorry to have made that decision for the people involved in it, clearly. We made that decision to close down the UK business in Q4 last year. And this year, if you first off start looking just at the numbers that we've just released, UK Amplify year to date down 38% at a revenue line, whilst Insights is up 26% at a revenue line. So there's the first piece of the jigsaw. If you look at our EBITDA with Amplify in, we're at -1% year to date. Without Amplify, our EBITDA growth is at 28%. In addition to that, our industry, the advertising industry, down 10% in January, 9% in February, according to the Standard Media Index numbers. And then it only makes up today 6% of our overall revenue. So it's sort of become an obvious business decision where you've got a declining market, a declining business unit, and that business unit has a small revenue impact, but actually quite a large EBITDA impact today. So that's become an obvious decision. Behind that, they're great people in that team. They're friends, they're colleagues, and they're dearly going to be missed in the business. And that's about 14 people across Pureprofile. So we were 211 people, takes us down to about 197 people. So that's incredibly sad for us. Fortunately, again, in the insight space, there's no client crossover, so no impact at all in the insights clients. And then what does it allow us to do? It allows us actually to double down and focus on data and insights and the growth market that is. And from an internal perspective, more support, more investment, more resources, and that we can absolutely focus on that growth data and insights unit.
And Mel, you've provided some revised guidance on the back of the closure of Pure Amplify. Can you take us through that?
Yeah, so we've previously given the market a range of guidance over the last 6 months of revenue of 48 to 52 million. Because of the performance of the Pure Amplify business over the last quarter, where we did see a rapid deterioration in line with what, as Martin just said, the industry in total, that sort of brought down that guidance to the lower end. So what we've done is we've reiterated to the market that it'll be around about $48 million. So still within the range, but at the lower end because of the impact of the Pure Amplify business on us. We also gave a EBITDA margin range of 9 to 10%. Because of, again, the deterioration of the business, that's sort of putting us back down at the lower end of 9%. So we're still in the range, even though we've seen that sort of impact on the business. And then if you strip out Pure Amplify media for the full year, we're looking at revenue of 45 million. And then our EBITDA margin improves by 2%. And the reason being is, and Q3 is a really wonderful example of this, is the Pure Amplify Australia business made a loss of $200,000 in that quarter. But if you looked at the same quarter last financial year, they actually made a profit of $100,000. So it sort of gives you a real insight into the year-on-year impact of that business and how it's flowed through to the bottom line and impacted our margin over the last 6 months. So, overall, stripping it out and closing it is actually really quite positive for our margin moving forward. It was our lowest margin revenue. And then, obviously with the deteriorating financial performance, it just, as Martin said, it was just a decision that was prudent for us to make.
Martin, you've been very clear on your 3-stage strategy for Pureprofile since you took over as CEO. And currently you're in stage 2, I think as you've highlighted to the market. At what point do you expect to move to that 3rd stage?
Yeah, Finola, we've been in stage 2 for about 2.5 years now. So we did the restructure of the first half of financial year 21. And since then, we've been in stage 2. And for us, stage 2 is focusing on that strategy of being a true global business, improving our technology, having SaaS solutions, and then it's been doubling down and focusing on our business units of data and insights and Amplify, and obviously moving forward just that growth there of data and insights. So we've been investing in people, the right people in the right locations, processes. We're truly global company. Every client, person, partner has the same experience no matter what office they're in. Through technology, the same technology, and improving our technology through client-facing solutions. And we've done all of that while still being operationally cash flow positive. So during that time, because our revenues have been growing, you've seen our EBITDA margin increase from 5% in financial year 21 to, as Mel talked about, without Amplify today, it's 11%. So we've seen that growth. But really, it's the time now. We've done enough on our technology and our processes to really start leveraging that investment that we've made. Obviously, investment is going to keep going on. We're in a fast-paced, $130 billion industry, you know, and artificial intelligence and what's going on there is an example of that. But it's now our chance to keep growing that top line, but really see that margin expansion coming through as well, whilst we leverage those investments we've been making during stage 2. So 1st of July, we move into stage 3.
Well, that's great to hear. Well, I'm looking forward to catching up with both of you towards in the next quarter and through the course of 2023. Thank you for your time today, Martin Filz and Melinda Sheppard.
Thanks, Finola.
Thanks, Finola.